All right, good morning, folks, and welcome to the Short Vol Show Live, your only show on YouTube dedicated to the short vol trade. And we have coming in today the VIX down. You know, it's amazing. I created this book on the group on Facebook about volatility trading because to counteract all of the messages that appear on StockTwits all the time saying it's time to buy the VIX, it's time to buy the VIX. And, you know, a lot of messages yesterday with the VIX down $1 on the day. People are saying it's time to buy it. You know, it's like against the trend. People are always finding a reason that they want to buy volatility. And I try to explain to people that, you know, the odds favor not buying volatility most of the time. And yes, the VIX has moved down to a lower spot right now, but the VIX can go lower here, folks. 1175 yesterday. A lot of people are calling to buy this thing. It has gone a little lower since then. And once again, futures are way above the spot price right now. Okay, so VIX 1148, the front future 14. Okay, 14 versus 11. Okay, it's like $2.50 higher, which is a huge spread. The second month future 15. Okay, so that is 12, 13, 14, 15. If I count on my pinkies and my toes, I get 3.5 point spread between the spot and the second month future. That's a big spread, folks, and that's a lot of room for this to absorb a pop in the VIX. It's also a lot of room for the front month to go down compared with the second month future to increase contango. There's just a lot of stuff that favors the downside right now as far as the medium term for the VIX. Now, what favors the upside? What's the case for the upside? Well, the case for the upside is, of course, that several times this year the VIX has bounced off of the 11, 12 range. If we look here, you can see just on this chart of, I think this is like 180 days. Look, if we draw a line right where we are now, look, we're right on the bottom of the range for the whole year so far, pretty much. It's bounced off of this level pretty much the whole year so far, and that is the case that people that are long volatility will make. However, this is where the VIX is right now, and just to illustrate, the futures are up here now. The front month futures here, the second month futures up here. So that, so you remember when you're trading UVXY and VXX, you're not trading 1148. You're buying 14 and change. You're buying right now. You're buying 1415, 1497, a mix of those two futures. So you're actually buying up here. You're not buying down here when you trade these VIX ETPs. And even if you're buying actual VIX futures or options on futures, you're still buying up here. So that makes it look a little different. It's buying up here doesn't look like a great buy. It looks like average at most. And this stuff can go, the VIX can go a lot lower. Remember, we thought it was irrational when it was down around 10 or 9, and it seemed really low, but it can go lower. It can get back down there again. As we remember that famous quote, markets can remain irrational longer than you can remain solvent. So I don't advocate buying this right now. I don't know if you want to initiate a short. My bias would be neutral right now, but if you're already short, then stick with it because there's a lot of decay to come still. My position is I am short UVXY right now, and I'm kind of sticking with it for now. There's a lot of articles about how there's a sort of a sector rotation going on within the market. You know, notice that a lot of our favorites to watch, the Facebook, Apple. I sound like an old person now. The Facebook, the Apple. A lot of these, the FANGs are not leading right now. And check out Phenom Group for Seth's latest article discussing some of these topics. He has some good graphs of the industrial sector right now, or charts, I should say, instead of graphs. Have you guys seen this trader Anton Creel? He's got this one famous video where he like exposes, the truth and all this stuff. And a lot of people think he's great, but I just think that this guy has to be could be like the most arrogant guy I've ever seen. He was a Goldman Sachs trader for a while and made some money. Well, big deal. I love the sweaters and stuff, but he's got a good scam going, that's for sure. I got to give that to him. You can pay thousands of dollars to go hang out with him and his boys at a bar, and maybe if you give him $10,000 to hang out with him, he'll say, "Oh yeah, you know what you're talking about, or you're cool." But this is a famous video from Anton Creel, and I apologize if people know him and he's a nice guy, but it just comes across as really arrogant. And just to summarize this 2-hour video, he's basically saying that look, the cowboy years, the cowboy days of the 80s and 90s are kind of gone. There's not a lot of money to be made day trading. Brokerages are essentially a scam, and the market's kind of rigged against you. And he advocates basically swing trading on several positions, having an average trade duration of a couple days to a couple weeks, and which is nothing really amazing. He doesn't have this super amazing strategy. In fact, I would argue that some of our VIX strategies are more revolutionary and complex than what he's talking about there. And that's great. He worked for Goldman Sachs. Many people have worked for Goldman Sachs. Great firm. He was a firm trader. And he made money. That's great. He's the real deal, and that he was a firm trader for Goldman. I'm the real deal. I was a firm trader for Group 1. Group 1 may not have the name that Goldman does internationally, but for people who know trading and option market making, the respect is there as well. And I don't walk around in my blue sweater and hang out going from hotel to hotel, ripping people off, charging them thousands of dollars for seminars. Maybe I should. But he's certainly learned how to cash in and got some of his old Goldman boys to pitch in to make themselves a whole lot of money to hang out in schmoozy hotels around the world and talk about the good old days when they were trading at Goldman. So, it's funny because even the guy's name is cocky. He's Anton Creel. Anyways, I don't know why I have it. I don't know why I have it out for these people today, but a lot of the people online they're trying to sell you something. You don't think this guy's trying to sell you something? Education, mentoring, seminars. You don't need to pay a whole lot of. We're in this business to make money, not to pay somebody else a whole lot of money. And yeah, you could say, well, I'm trying to sell something too because I want you to pay $1 for Patreon. But it's a little different paying $1 for Patreon to keep a channel going than these guys, oh, well, if you get tickets, then you can come afterwards and talk to me in the bar while I sip my Campari and soda or whatever. Anyway, so that's my take on Anton Creel. Maybe he's a super nice guy, but he certainly is charging an arm and a leg and acting very snooty towards a whole lot of people who are just out there looking to learn something. And his ideas, as far as I can tell so far, are not revolutionary anyway. He just kind of describes what it was like being a firm trader and talks about what firm traders were doing up at Goldman Sachs, which was swing trading size in big positions, which I already knew that was going on years ago. So that's my commentary on Anton Creel. I guess I've run out of steam on that one. Check out the couple stocks to watch today. Let's do that. I've been looking at NBEV, symbol NBEV, symbol MTEM. that were on the move yesterday. But mostly today, I will be checking out Tilray and those other ones. I'm looking to do to get long Facebook and do sort of a, I guess Spit and Shine was calling it the poor man's covered call. And so I'm looking in Facebook to do some sort of trade, like, for example, buying the Jan of this year 165 call and selling front month 170, 175 calls against them on a sort of a covered call. This way, I feel that Facebook will resume its rally at some point, but in the meantime, so I could stay long it, but in the meantime, sell some calls against the long I have to finance decay in an options thing. So once again, looking to do a little diagonal spread in Facebook, buying Jan leaps either this year or next year and selling front month options against it. I'm kind of in the way of the screen here, but if we look at the screen in Facebook here, I believe it will recover sometime soon, and so I'm looking to buy some sort of leaps call. So if we go out to Jan, or let's go out to June, 274 days. Okay, so if we buy the 160 call, it's $20, aka $2,000 per call, and then we could sell, October, 15 days out against it. We could sell like the 170 in October for $1. Okay, so stock just hangs around. We collect $100. If it rallies above 170 right before these expire, you can roll them. You can buy them back and sell something else higher. So, for example, stock goes to 170. Okay, well, great. You make money on your long leap calls or June calls, and this one decays a little bit, probably performs badly, and you just lose a teeny bit of money on this one. You buy this call back, and you roll out to something else. Maybe like you go out to OCT29 and you sell the 190 calls against them, which would be higher at that point, something like that. So this is a way to have a long in Facebook that takes less capital than actually paying $164 a share, and helps finance itself by selling a out of the money call against your long call in the back month. So that's an idea that I'm considering right now. The other thing is that I do have a position on UVXY where I waited till we did the reverse split, and then I went ahead and I bought December 36 calls and sold the 34 calls against them. I paid $132 for that yesterday. So buying betting $1.30 to make 70, basically 70 cents to just kind of round it. I did that based on my calculation of about 5% contango, that all things being equal, this is going to decay by about $2 a month. And so 92 days out, that's 3 months. So 2 times 3 is 6. So if you subtract 6 from 37, you get 31. So this put spread should be below 34 comfortably with margin for error. So that was my deal on that one. I also did a similar trade in January farther out. Notice I'm picking 3-4 months out so that if we do get a pop, I can weather it and still make money on this trade. Like, I don't have to worry if this pops. If VIX pops to 15 tomorrow and the futures go up a little, I don't have to worry because I've got months still before this trade needs to be below 34, at or below 34. So that's my idea for right now, and that's what I have to say right now. And stay tuned later on today for an interview with an exciting trader from StockTwits. And can't wait to see you then. Thank you for all your support, and I will see you in the next video.